Welcome to our deep dive into GE Aerospace, a company that's kind of sort of inherited the legacy of the entire General Electric empire. You might be surprised to learn that this aviation giant actually emerged from what was once a sprawling conglomerate involved in everything from light bulbs to finance.
Yeah, it's a fascinating transition that speaks volumes about both the company's evolution and the changing landscape of American industry. What we're going to do today is explore GE's journey, those pivotal acquisitions that shaped its path, and ultimately understand what this complex history means for the newly independent GE Aerospace.
Yeah, this is a story that begins all the way back in the late 19th century when Thomas Edison's company merged with Thomson Houston Electric Company, giving birth to the powerhouse we know as General Electric. Their impact on innovation in electricity lighting and power generation is undeniable.
And their influence extended even further, reaching into the early days of radio and television with the founding of RCA in 1919, a venture that later led to the co-founding of NBC. These early forays into diverse industries foreshadowed GE's future as a sprawling conglomerate.
But it was in the mid-20th century that GE truly made its mark on aviation, becoming a leading manufacturer of jet engines. This was a time of remarkable technological advancement, and GE was at the forefront shaping the future of flight.
However, by the 2000s, GE's expansive reach across so many industries led to a sense that they'd lost focus. This was compounded by the impact of the Great Recession, which hit their finance arm, GE Capital, particularly hard. It became a turning point, marking the beginning of GE's shift away from its conglomerate structure.
That's when we see this dramatic reshaping of the company. They began selling off various divisions, from appliances and finance to even their locomotive business. Each CEO had their own vision, further influencing the company's trajectory. Under Jeff Immelt, there was a greater emphasis on industrial businesses, while John Flannery, his successor, doubled down on aviation by divesting assets like locomotives and lighting.
Then came the unprecedented challenge of the COVID-19 pandemic, which dealt a significant blow to the aviation industry, including GE's aviation segment. This tumultuous period ultimately led to the decision under Larry Culp, GE's final CEO, to break up the company entirely.
In a bold move, they spun off their healthcare and energy businesses in 2023 and 2024, and with that, GE Aerospace emerged as a standalone entity. Now we have a company with a 130-year legacy, suddenly focused solely on aviation. Begs the question, how will this storied past impact GE Aerospace's future?
And that's precisely what we're here to unpack. To understand GE Aerospace's potential, we need to delve into its financial performance innovation pipeline and its position in the competitive landscape of the aviation industry. Let's start by kind of dissecting the financials. Before the final spinoff, GE as a whole generated $68 billion in revenue in 2023 with a net income of $9 billion. While detailed financials for GE Aerospace as a standalone entity aren't readily available, yet we can glean insights from GE's annual reports.
Yeah, it's interesting because even during the pandemic downturn, their aviation segment, which essentially forms the core of GE Aerospace, demonstrated resilience and strong performance. This makes me wonder what's driving that stability.
Yeah. A key factor is their position as a major player in the global aviation market. GE Aerospace is one of the world's largest manufacturers of jet engines, directly competing with industry giants like Rolls-Royce. This means their engines are powering airlines across the globe, securing a significant market share.
So it seems like GE Aerospace is taking off from a solid foundation. But in such a dynamic industry, standing still is not an option. What about their innovation pipeline? Are they investing in the future of aviation technology to stay ahead of the curve?
What's fascinating here is that GE has always been synonymous with innovation, a legacy that dates back to Thomas Edison himself. Even as a conglomerate, their commitment to research and development was evident. This tradition continues with GE Aerospace as they are actively exploring and investing in next-generation technologies.
This focus on the future is crucial, especially with the growing emphasis on sustainability in the aviation sector. I'm particularly interested in their work on fuel-efficient engines and the exploration of alternative fuel sources. How are these advancements shaping their strategy?
You've hit upon a key aspect of GE Aerospace's approach. Sustainability is not just a buzzword for them, it's a core driver of their innovation. They are actively developing more fuel-efficient engines, which is critical in addressing environmental concerns and reducing operational costs for airlines, but they are not stopping there.
I've read about their work on hybrid electric propulsion systems. This seems like a bold step towards a more sustainable future for air travel. Can you elaborate on the potential impact of this technology?
Hybrid electric propulsion is indeed a game changer. It involves combining traditional gas turbine engines with electric motors aiming to significantly reduce fuel consumption and emissions. It's a complex technology, but GE Aerospace is making strides in its development, recognizing its potential to revolutionize the industry.
This commitment to innovation certainly paints an optimistic picture. But for investors, it's essential to look at the numbers. What's the market saying about GE Aerospace's valuation as a standalone entity?
Analysts on TipRanks, a platform that tracks and measures the performance of financial analysts, are generally optimistic. Based on their projections, the average price target suggests a potential upside, indicating that Wall Street sees promise in GE Aerospace's future. However, it's important to note that these are just projections, and a thorough analysis requires considering a multitude of
That's
factors.
a good point. While analyst ratings provide valuable insights, it's crucial to dig deeper. Has GE Aerospace been making any strategic acquisitions to bolster its market position or expand into new areas within the aviation sector?
That's an interesting question because historically GE was known for its acquisitive nature, using it as a strategy to build its conglomerate empire. However, GE Aerospace seems to be adopting a more measured approach, at least for now.
So rather than chasing aggressive expansion through acquisitions, they're focusing on internal growth and optimization. This makes sense, especially after the spin-offs. But what about their services business? How does it contribute to their overall revenue stream?
Their services business is a significant piece of the puzzle. GE Aerospace isn't just about selling engines. They provide a comprehensive suite of services to airlines worldwide. This includes maintenance and repair services, as well as digital solutions designed to optimize airline operations.
This recurring revenue stream from their services segment is likely a major advantage, providing stability and mitigating some of the inherent volatility in the aviation market. It seems like they're strategically leveraging this to create a more predictable and sustainable business model.
Absolutely. The services segment provides a buffer against the cyclical nature of the aviation industry, which is heavily influenced by economic fluctuations and global events. This dual approach of manufacturing and services allows GE Aerospace to weather the storms and maintain a steady course.
Now let's zoom out and consider the broader economic impact of GE Aerospace. They are a major force in aviation, a sector that plays a crucial role in driving global economic activity. How would you characterize their contribution to the bigger picture?
GE Aerospace's impact is undeniably significant and multifaceted. It extends far beyond the thousands of jobs they directly provide. Their engines power the aircraft that connect people and businesses across continents, facilitating trade tourism and a wide range of economic activities. This ripple effect creates a network of interconnected industries and employment opportunities contributing to global economic growth.
It's a chain reaction where their role in enabling air travel becomes a catalyst for a vast web of economic activities. But as with any investment, there are two sides to the coin. What are the potential pros and cons of owning GE Aerospace stock?
On the positive side, GE Aerospace boasts a strong market position, a legacy of innovation, and a robust services business. They are well positioned to capitalize on the resurgence in travel demand post-pandemic and the continued growth of the aviation industry. These factors make GE Aerospace an attractive prospect for investors seeking exposure to this dynamic sector.
Those are compelling arguments in their favor. However, it's crucial to approach any investment with a balanced perspective. What are the potential downsides or risks investors should be aware of when evaluating GE Aerospace?
Of course, no investment is without risks. The aviation industry is inherently cyclical and susceptible to economic downturns. Intense competition from established players and potential technological disruptions pose ongoing challenges. Additionally, GE's past struggles and accounting controversies, though associated with the conglomerate structure, might raise concerns for some investors.
It's understandable that those past issues might linger in the minds of some investors. But it's important to remember that GE Aerospace is a separate entity striving to build its own identity. The question is, can they convince the market that they have truly moved beyond the shadows of the past?
It's a valid point. Perception plays a significant role in the financial markets. GE Aerospace needs to demonstrate its commitment to transparency, sound financial practices, and a forward-looking strategy to build trust and confidence among investors.
Speaking of investor considerations, let's delve into GE Aerospace's dividend policy. We know that GE as a conglomerate had a long history of paying dividends, but they significantly reduced it in 2018. What's the current situation for GE Aerospace?
This is a crucial point for income-focused investors. Unfortunately, GE Aerospace has not yet reinstated a dividend. This may disappoint those seeking immediate income from their investments. Their current priority seems to be on paying down debt and reinvesting in their business, particularly after the spin-offs.
That's a pragmatic approach, especially as they navigate this transitional phase and solidify their financial footing. But what about share buybacks? Are they employing this strategy as a way to return value to shareholders?
Similar to dividends, there haven't been any announcements regarding a share buyback program. This suggests that their focus remains on strengthening their financial position and investing in growth opportunities to enhance the long-term value of the company.
So for now, it seems that GE Aerospace is prioritizing financial stability and strategic investments over immediate shareholder returns. It's a long game, and it will be interesting to see how this unfolds in the coming years.
Indeed, investors seeking short-term gains might find this approach less appealing. However, those with a long-term perspective might see this focus on building a solid foundation as a positive indicator for future growth and potential returns.
Now, no deep dive into a company would be complete without considering the ESG factors which encompass environmental, social, and governance practices. How does GE Aerospace measure up in these areas, especially given GE's historical baggage?
This is where things get a bit more complex. GE as a whole has faced criticism for its environmental record in the past, particularly regarding pollution issues.
Yes, the Hudson River PCB contamination was a significant controversy that tarnished GE's reputation. It's a reminder of the lasting impact of environmental missteps. How is GE Aerospace addressing this legacy?
GE Aerospace inherits this legacy, but they're also actively trying to position themselves as a leader in sustainable aviation. This involves investing in fuel-efficient engines, exploring alternative fuels, and implementing practices to reduce their overall environmental footprint. These are positive steps, but it remains to be seen how effectively they can navigate this challenge and convince investors of their genuine commitment to ESG principles.
It's a tightrope walk. They're trying to reconcile a past, marred by environmental concerns, with a present focused on building a more sustainable future. How this story unfolds will be critical for their long-term success and how they are perceived by investors who prioritize ESG factors.
Absolutely. Transparency, accountability, and tangible progress are essential for GE Aerospace to demonstrate that they are not just paying lip service to sustainability, but are truly integrating it into their core business strategy. This will be a key area to watch in the coming years.
So we've covered a lot of ground in our deep dive into GE Aerospace, tracing their journey from a small lab in Menlo Park to their current position as a major force in global aviation. It's a story of remarkable transformation reflecting not only the company's evolution, but also the dynamic shifts within American industry.
Yeah, it's a narrative filled with twists and turns, from powering homes with light bulbs to powering planes with jet engines. GE's story is one of constant adaptation and reinvention, a testament to their drive to remain relevant and impactful in a changing world.
Yeah, what strikes me is the sheer scope of their legacy. GE's history is intertwined with some of the most significant technological advancements of the past century. And now GE Aerospace carries that legacy forward, focusing on the future of flight.
It's almost poetic when you think about it. A company born from the electrification of America is now tackling the electrification of the skies with their work on hybrid electric propulsion systems. This ambition to push the boundaries of technology is a key takeaway from our deep dive.
And it raises a question that I find particularly intriguing. GE, in its conglomerate form, was known for its aggressive acquisition strategy. Will GE Aerospace, now streamlined and focused, follow the same playbook?
That's a question worth pondering. Will they prioritize organic growth, developing their own technologies and expanding their existing services? Or will they pursue acquisitions to bolster their market position or acquire cutting-edge technologies in niche aviation markets? Their future trajectory hinges on these strategic decisions.
This leads us to another crucial aspect: competition. Companies like Rolls-Royce and Pratt & Whitney are formidable rivals, and they won't passively observe GE Aerospace's moves.
Absolutely. The aviation industry is fiercely competitive. GE Aerospace needs to be strategic, agile, and innovative to maintain its leading position. Staying ahead of the curve in technology efficiency and sustainability is no longer a choice. It's a necessity for survival in this dynamic landscape.
So as we conclude our deep dive, what does this all mean for the future of GE Aerospace? Can they leverage their legacy, navigate these challenges, and soar to new heights?
That's the billion-dollar question. Only time will tell how this story unfolds. But one thing is certain: GE Aerospace possesses a rich history of innovation and a deep understanding of the aviation industry. They are in a strong position to succeed, but they must navigate a complex and rapidly changing landscape.
It's an exciting time for the aviation industry, with new technologies emerging and a growing emphasis on sustainability. Will GE Aerospace, with its legacy of invention and newfound focus, rise to the challenge and shape the future of flight? Well, that's something we'll have to wait and see. And as always, we encourage you to share your thoughts and predictions in the comment section below. Hey, while you're there, let us know what other companies you'd like us to deep dive into. Until next time, keep exploring, keep learning, and keep diving deep.